It's all nice to think that the markets all flow very beautifully and, up and down, peaks and troughs and so on, but that's not always the case. Sometimes the markets move with quite vigor, quite a lot of pace, and, not really taking any prisoners as they move higher and lower. The good news is that for us traders, a lot of the time, these things happen at times that we're aware of, so we can plan our day accordingly. There's something called an economic calendar. An economic calendar tells us when certain data events are going to be announced. So we'll know at 1:30 on a particular day that there's something called non-farm payroll, or that at midday there's UK interest rates and things like that. So we can plan our day accordingly around these major data points. Why are these important? They're important because this uncertainty usually leads to volatility in the market, fast-moving markets, erratic moving markets. This then increases our potential for being stopped out on trades and losing money. Therefore, as prudent traders, as risk managers, as we talk about, we need to be looking where those banana skins are before we look to place trades. We need to be looking about where they are and then perhaps adjusting our trade, not trading because of them. So if you're a longer term stock trader, perhaps you might look for when the stock has got its corporate results, its trading statement, AGM, something like that perhaps. If you're a day trader, if you're trading FX, you might be interested in the GDP number, interest rates, that sort of thing. And all of these things are widely available and freely available, and we'll give you some links to these very shortly, and they're available on the website as well. So news and announcements are an important thing. Now looking at this chart here, there's a potential buying opportunity on the far right hand side there, potential buy at 9:30. If you put your cursor over any particular candlestick, top left is black panel here, gives you the time at which that candlestick closes. So this is a 9:30 candlestick. This is particularly important, therefore, obviously for day traders, intraday traders. Not really so for longer term end of day traders off daily charts and so on. So there's a potential opportunity, a potential buying opportunity there at 9:30. Now our view is check your calendar. Look to see if something's coming out of that time, and if it is, you might just want to wait to see what's going to happen. Okay, so we refer to our economic calendar. So at 9:30, we can see that at 9:30, we've got data coming out here. Claimant count change, this is high impact data. We've also got the MPC meeting minutes. This is the Monetary Policy Committee meeting minutes. So it's what they've what the committee has discussed during the Monetary Policy Committee meeting. It's about interest rates, it's about quantitative easing perhaps. So it all comes out about that. Now, interest rates are a massive part of Forex trading. People are generally moving money around to take advantage of interest rates or interest rate change between different currencies. So, of course, anything that to do with interest rate policy is hugely important. It can lead to massive change in the marketplace. Interest rates in particular are probably the biggest impact items in our economic calendars. So anything to do with European, UK, US interest rates have a huge impact. And of course, if we're going to be trading Aussie dollar, then of course we need to know about the Australian interest rate changes and things like that. They generally have these meetings once a month, so it's not like something that happens every day, but it's something we do need to be aware of. And of course, anything to do with that, we need to be very careful of, and perhaps not trade over that period, or even in certain circumstances, maybe not trade certain markets for that particular day, because that has weird effects on the marketplace there. Another massive important piece of data is something called non-farm payroll or non-farm employment change in the US. It's a massive, massive piece of data. So FOMC, Federal Open Market Committee, and also non-farm payroll or NFP, very big data items there. So we've got to be very, very careful about these items when it comes to trading. And here's the reason why. Potential buying opportunity, but we decided to dodge that trade. We decided not to do it. And here's what happened. Huge banana skin. Massive fall in the marketplace, leading to a huge, huge stop.